Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to have you here for another deep dive into the latest market action. We've got a packed day with plenty of twists and turns, from geopolitical tensions to tech sector fireworks and some surprising earnings updates. So let's jump right in and break down what's moving the markets for long-term investors like you, while also touching on short-term trends to keep things spicy. First up, let's talk about the major indexes because they're setting the tone for the day. The Nasdaq stole the show with a solid 1.63% gain, closing at new record highs, driven by tech strength. The S&P 500 also climbed nicely, up 0.8%, reflecting broad market resilience. Meanwhile, the Dow Jones took a slight breather, dipping 0.16%, as some traditional sectors lagged. The Russell 2000, representing smaller caps, nudged up by 0.43%, showing that risk appetite is still alive. And hey, check out the VIX, the fear gauge, dropping over 3%, signaling calmer waters despite global uncertainties. For us long-term folks, this mixed performance suggests the market is still a growth story, but with selective opportunities. Now, let's zoom out to the bigger picture with some headline news shaking things up. Despite the ongoing Iran war and elevated oil prices, markets are showing remarkable grit. Analysts are pointing to strong corporate fundamentals and a focus on tech innovation as reasons why equities aren't buckling under geopolitical pressure. But here's a heads up for long-term strategy. While short-term oil volatility could spike costs, it's also pushing interest in alternative energy and defense tech, sectors worth watching for portfolio diversification. Plus, consumer sentiment hit a record low due to war-related anxieties, which could temper discretionary spending in the near term. Keep an eye on how this plays out for retail and consumer stocks over the next few quarters. Shifting gears to the day's big winners, large-cap gainers were dominated by the tech and energy sectors. Intel surged nearly 5%, riding the wave of AI-driven demand for chips, while advanced micro devices also climbed over 3%. Showing the semiconductor space is still red hot. On the energy front, companies like Equinor and Eni posted gains around 3 to 4%, likely benefiting from those elevated oil prices we just mentioned. For long-term investors, this tech rally isn't just a flash in the pan. AI and data center growth are secular trends worth riding, though valuations are getting frothy, so timing matters. On the flip side, not everyone had a great day. Tesla took a hit, dropping over 5%, as concerns about delivery numbers and heavy capex spending spooked investors. ASML and GE Aerospace also saw declines around 3 to 4%, reflecting some profit-taking in high-flying names. For us long-term players, these dips could be entry points, especially with Tesla if you believe in their AI and robotics vision. But short-term, expect more volatility as the market digests their aggressive spending plans. Looking at the market movers, Nvidia continues to be a heavyweight, inching up nearly 1% with massive trading volume, underscoring its role as an AI juggernaut. Amazon held steady despite a slight dip, while Tesla's drop made it a focal point for traders. These names are shaping market sentiment, and for long-term investors, they're core holdings to consider for growth exposure. Short-term, though, watch for any pullbacks as potential buying opportunities if macro conditions stabilize. Speaking of volume, the most active stocks today included Nvidia and Tesla. No surprise there, with billions of shares changing hands. Intel also saw heavy action after its strong performance, alongside names like Nike and Nokia, which caught attention with notable moves. High volume often signals strong investor interest, so for us long-term thinkers, it's a reminder to dig into the fundamentals of these names. Are they trends or traps? Let's pivot to earnings, as it's a critical time for gauging corporate health. This week, we've got a lineup of heavy hitters reporting, including Intel, Alphabet, and Procter & Gamble, among others. Intel already delivered a blockbuster quarter, beating expectations on AI chip demand, though they posted a net loss due to some one-off charges, a mixed bag for long-term holders. Alphabet's results will be key to watch for AI and cloud growth signals, while P&G gave us a reason to cheer with upbeat earnings despite commodity cost headwinds. These reports are vital for us to assess whether current market optimism holds water over the coming years, especially in tech and consumer staples. Short term, expect some choppiness as the market reacts to guidance. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your portfolio. Over the past week, some large-cap stocks have been on fire. Garmin led the pack with a massive 21% jump, while Lumentum Holdings and AppLovin both gained around 15%. Shopify and Occidental Petroleum also posted double-digit gains. For long-term investors, these weekly movers highlight where momentum is building. Tech and energy are clearly in focus. But remember, chasing hot streaks can be risky. Look for sustainable growth drivers before jumping in. On the other end, weekly losers included Genuine Parts, down over 20%, and Rivian, shedding 14%. Blue Owl Capital and Okta also took hits around 13%. These declines might signal short-term pain, but for us long-term folks, they could be contrarian opportunities if the underlying businesses remain solid. Keep these on your watch list for potential rebounds. Wrapping up with sectors, industrials topped the charts this week with a 2.12% gain, followed by consumer cyclicals up 1.62%. Energy also shone brightly, up over 4% week over week, no doubt tied to oil dynamics. These moves suggest strength in cyclical and commodity-driven areas, which could be a hedge for long-term portfolios against tech-heavy exposure. On the weaker side, healthcare lagged with a 0.62% drop, while utilities and financials saw minor declines. These underperformers might face near-term headwinds, but for long-term strategies, healthcare's defensive nature could still offer stability in turbulent times. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stay engaged with our daily updates and in-depth SWOT analyses to keep your investment game sharp. Hit that subscribe button, drop a like, and we'll see you tomorrow for more market insights. Until then, keep building that wealth.